Yeah, hello again. This is the last video for today in all probability, and it will be a short one. And sorry to disappoint you, it's not the last video in this sequence in the series here. Far from that, but only the last one, which I'm going to upload today. The minimum tax base, ladies and gentlemen, is a last chapter when we talk about the tax base of value-added tax. So, you probably don't know, but you will now get known with a special phenomenon. There are certain cases where the amount which you get in return for what you do, so the consideration, might not be a good idea to serve as a tax base. First, it might be manipulated downwards for personal reasons. For example, you have some personal friends and you want to do them a favor, or you just want to play some nice bad tricks on the fisc. There are also some other taxable transactions, for example, withdrawals from the enterprise, where you can find no consideration at all, because if I withdraw something from my enterprise which already belongs to me, I cannot pay myself any money for this specific occasion. So, just to illustrate again where that might happen, imagine an entrepreneur sells to his son an absolutely new Mercedes car, which was bought last week for 50,000 plus 9.5 VAT for an amount of only €1. And that is even then a gross price. So the net price is then 84 cents and the VAT would be 16 cents. That is evidently a price which does not really reflect the economic reality. What happens here in reality is that the entrepreneur makes his price with his son only for personal reasons. And now if you accept this transaction as it stands, that would lead to an intolerable tax advantage for the consumer, for the family and friends of entrepreneurs, because normal people can only buy that car for 59,500 at least, so they would bear tax on the consumer of 9,500. But here the son acquired it and it bore a VAT burden of 16 cents only because father, for being a trader, claimed the VAT input tax refund. And so indeed the complete tax would have been reduced to 16 cents. That can't work naturally. And so we have to do something against this. And that is why the legislator introduced the minimum tax base as a minimum tax base, indeed, in such cases. Or an entrepreneur gives a car as a present to her daughter, which she bought for her enterprise 2 years ago or 2 weeks ago for 40,000 plus 7,600. Here, giving it away as a present, so withdrawing it into the private sphere and then making a present to somebody else out of private motives is there is no price at all. So you have nothing which you can levy a tax on. Nevertheless, a withdrawal should not remain untaxed, and so you need a solution for that. The solution is apply the minimum tax base. Or somebody bought a car for her enterprise and withdrew it later in order to make it a private car 2 years later. There is no consideration for a withdrawal again, but it's logically not possible to pay a price to oneself. And on the other hand, it's not logically convincing to leave that transaction untaxed. So you need some default option, and that is the minimum tax base. So whenever the regular tax base is not there, cannot be found, or would probably not be sufficient, in these situations, the minimum tax base comes into the question and has to be tested. The minimum tax base can be found in paragraph 10.4 UStG, and it is applied, just to repeat that, either where you have no other tax base at all, so where no amount is paid, or where the amount paid could have been manipulated downwards for personal reasons, like in the case where you sell your children see this car for €1. This is evidently not a market price. On the other hand, you should know that the minimum tax base, if a price is paid, that the minimum tax price is then only applied if the price which you made is not market conform. So if it's not driven by enterprise related reasons, but by personal reasons. So what would not be a case for the minimum tax base is if a car factory sells a car, usually for very high prices, but for prominent people and diplomats, similar guys, they sell their cars below the costs or give them away even for free. The idea behind that is, in their case, that they hope convincingly and successfully that over a very long time people get used to see nearly all very prominent people driving their cars, and so that they can establish by that, in the long run, a general expectation that successful and important people only drive that brand, these cars. So this would not be a case for the minimum tax base, because here the low prices are motivated by business-related motives, so they are market conform. So the minimum tax base in German law would apply if there are personal reasons in play or there is nothing at all. Now the minimum tax base has different ways how it is calculated depending on the situation. If goods are delivered or something like a withdrawal of a good happens, then the minimum tax base is defined as the purchase price of that good at the time of the event. And that means not the historical cost of the good which you withdraw or sell at too low a price, but the repurchase price, because the purchase price at the time of the present transaction is the price which the entrepreneur would now have to pay for exactly that good in that condition at that time today. So it's the repurchase price, not the historical one. If we have a case that an asset of the enterprise is not withdrawn or sold, but only used for a service, then the minimum tax base is the amount of those costs which are connected with that asset, which the private usage of that asset, which entitled the enterprise to an input tax deduction. So basically, this comes very near to just revoking the input tax deduction on those parts of the costs which relate to the private usage of an asset. For any other use of services produced by the enterprise, the amount of all costs connected with that service serve as minimum tax base, so as a minimum market price. Here the idea seems to be that such services should be taxed at a market price that one could probably not demand from the entrepreneur to make profit in a transaction with himself or herself, so that the profit margin can be set as zero, but that the total amount of costs must be recovered. And this gives the justification why in these cases one can say, okay, normal services should be valued with the total amount of costs related to the production of these services. So cases where we can apply that: a car trader buys a new Mercedes car for 59,500, so he or she gets 9,500 VAT input tax deduction. Now the car is heavily damaged during an accident. The remaining market value of the car is now deemed to be 10,000 plus VAT. The car trader thinks correctly that it would damage the reputation of the firm to sell such a car to one of his customers, so he gives the car, or she gives the car as a present to her son, who is a student in a faraway city where the reputation of this trading house cannot be impacted negatively. So here the car is withdrawn into the private sphere, and the withdrawal should be taxed, but the withdrawal should be taxed on the basis of the minimum tax base. 10.4 number 1, because the withdrawal of a good is something which is comparable to a delivery of a good. And now we shall have to value that with the repurchase price at the moment of the event. And since the car has been heavily damaged, and we said the remaining market price is only 10,000, then this remaining value of 10,000 can only be the price which counts for the determination of the minimum tax base. Imagine a second idea: an owner of a food store or grocery buys salad on Monday morning for €1 and displays it for sale, waiting for interested customers. Now, customers don't show up. At least if they show up, they don't want to buy that particular salad. So on Friday afternoon, the owner gives up any hope to find a customer who is willing to buy this salad and takes it home in order to feed it to his little rabbit. Now, this is a withdrawal of goods into the private sphere for private usage, but at the moment when the salad is withdrawn, it has no longer the value from Monday morning. So at the moment, the repurchase price of that particular salad is probably far, far lower than on Monday morning, because it's no longer fit for human consumption. Perhaps the salad is even worthless or has a remaining value of 1 cent or 2 cents or so. So that must be taken into account. You can't charge, it would not be fair to charge the owner of the food store with the historical cost of acquisition of the salad. What happened is just the salad waited for a customer. That happens in an enterprise, and it's clear that the goods in stock lose value over time and can later only be sold for a lower market value. That's within the calculation. Everybody expects that. You have to live with that, and so this is nothing which would be extraordinary. And so you can't demand from the enterprise owner that the salad from Monday should still be taxed at the value of Monday. The correct value would be the value for which you could buy a salad of that age in that condition on Friday afternoon, and that explains why here we have nearly no tax base at all left over. When it comes to the minimum tax base and you want to inform yourselves about where the underlying rules in the EU directive are, have a look to Articles 72 to 77 of the Value Added Tax Directive of the EU from 2006. There you can find in long and short version in every detail the underlying rules of European Union law. To sum up, ladies and gentlemen, there are only two possible tax base rules. The one is 10.1 under normal conditions. So the consideration, the net amount which you receive for selling your goods or services, or if that does not really work because you either have no consideration or you do business with close relatives where one can suspect you that the price has been set too low because of personal motives, then you have a minimum tax base which at least serves as tax base. So if there is with close relatives an agreed consideration, this is the tax base. If it's higher, only 10.4 comes into play as a minimum. So you must at least pay taxes on this amount with the applicable tax rate. But if the normal tax base is also existing and is higher, then it still will be used and serve as tax base, because the fisc uses the 10.4 tax base to avoid damage to the fisc and not to get rid of, let's say, higher tax claims. Yeah, that were my remarks to the minimum tax base. Already enough on that topic. Later we will and have to practice that with cases, but as a first orientation, that might be sufficient. So again, the magic words. Thanks for watching. It was nice that you did it, and come back soon when the next chapter is going online. Till then, take a break, recover, and come back in a good mood. Thanks for watching. Till later.